Hello, everyone, and welcome to a new edition of Merrill's Market Madness. I usually do this on Mondays, but obviously today is not a Monday. But I missed the show this week, so I decided I needed to get one in because there's a lot of interesting things happening in the market right now, and I really wanted to get everyone updated with the trends and what we're seeing and what's happening. So if you've watched any of my previous episodes, I always start by looking at a metric called months supply of inventory. It's kind of a saturation rate. If no new homes were to come on the market, how long would it take for everything that's currently for sale to be gone based on the pace at which homes are currently selling? So today, right before recording this video, I looked these numbers up. We have 7,233 active listings in our MLS. 12,000 homes are currently pending. So we still have significantly more pendings than we do have active listings. 8,988 homes have closed in the past 30 days. And that gives us a month supply of inventory number of 0.8. Which is the highest month supply of inventory we've had in quite a while. We have been at one point as low as 0.4 on our month supply of inventory. So we've doubled, yay! But it is still desperately low. So if you're waiting for the market to shift, the pace at which we're currently gaining homes, it will take a couple of years before we transition into a buyer's market. I think, I believe what is still happening is, is somewhat seasonal, right? There are a lot of people who had already planned on moving heading into the summer, have already bought. So the absolute buying frenzy has calmed down a little bit. But we're still selling, we're still probably going to sell somewhere between 8,000 and 9,000 homes in the month of August, which is a very high number. So there's still, or let's not call it a very high number. It's a typical number. We're selling about the same number of homes in this August as we do a typical August. 2020 was a little funky because of COVID. The normal annual sales cycle got a little bit messed up. But, if you look back at 2019 and 2018, selling 8,500 homes is probably pretty typical for an August. So demand seems to be about normal, but supply is still really low. I am going to go ahead and share my screen with you because I want to show you a piece of data put out by the National Association of Realtors. Hopefully you guys can all see this, but this actually measures the month supply of inventory nationally. Okay, so according to their metric, a neutral market would have 6 to 7 months supply. I think it could maybe be as little as a 5 month supply. As little as a 5 month supply might be a balanced market. So you see in 2008 to 2008, 2010, basically from 2006 to 2012-ish or so, nationally, we had over a 6 month supply of inventory or over a 7 month supply of inventory, essentially creating a buyer's market and driving home prices down. And ever since then, we have been in this situation where inventory kept falling and falling and falling. And now we're finally at this point where it has started to move up a little tiny bit. But keep in mind, if you look at this graph, this has us nationally at a month supply of inventory of what, 2.5. Well, I just shared with you our numbers here in Phoenix are still 0.8. So we have a very long way to go. And as you can see, it's not abnormal to have an annual sales cycle where every year, right, the inventory drops and then it goes up again, drops, then it goes up again, drops. So this could just be a hump on the camel's back. So not necessarily something that I'm expecting, home values to absolutely switch. I think that home values are going to continue to rise. We've seen something somewhere around in the Phoenix metro area, average sales prices have increased year over year by around 40%. And with inventory finally starting to rise a little bit, I don't think we're going to see another increase of 40% over the next year. But I do think that home values are going to continue to rise based on how low inventory is. I wouldn't even be remotely surprised to see inventory, average sales prices increase somewhere in the 10 to 15% for the next year. So if you're one of those people who's been waiting for the market to crash, please know my opinion is that is not going to be happening anytime soon. The inventory situation is still so incredibly dire. Now, the other thing that I wanted to share really quickly is Freddie Mac. I share this a lot of the times. They have kind of an average interest rate chart, and you see average rates are lower than they have been. If you missed the boat on refinancing and you thought rates were still up here in the mid threes, right now 2.87 on a 30-year fixed. So average rates are super, super low. They were 2.77 last week, 2.87 this week. Of course, there's a little bit of normal fluctuation that happens. Now, on to our main topic for this week's episode. I wanted to look at, let me explain this chart for you because it's probably not very easy to read, but I've been working with more and more investors, and I wanted to talk about the numbers in terms of, a lot of times people will come to me and will want to know where is the best place to invest. And I've looked at these numbers before, but it's been probably a year since I ran them. So I decided to do an update. In this week's episode, I'm only looking at East Valley cities. Next week, I'll take a look at West Valley cities, and I'll incorporate them into this chart so we can compare pretty much the whole Phoenix metro area. But basically, what I'm doing here is I'm looking at the average sales price for a very typical investment type property: 3-bedroom, 2-bath, single story, 2-car garage, no pool, 1,200 to 1,800 square feet, not furnished, not in a 55 plus community. Okay, so take all those parameters and said, okay, what was the average sales price of that home over the last 30 days in Chandler? And it was $428,102. Well, what was the average rent for the same parameters over the past 30 days? And in Chandler, it was $2,127. So if you bought that home and rented it out, you would basically be receiving 0.5% of the purchase price back in rent every single month. Okay. And I did this for every single city. And, so we've got Gilbert in the East Valley. Well, I probably missed. I didn't do Gold Canyon. I didn't do Apache Junction. But I tried to hit some of the bigger ones. So if there's a city that I didn't do and you really want me to see it, let me know. I'd love to run the numbers for you. But Gilbert is 0.52, Queen Creek 0.53, Santan Valley 0.52, and then Florence and Coolidge, the clear winners, at 0.65%. So if you bought one of those homes and rented it out, in other words, the rent is higher on average compared to the sales price. And that's typical. Typically what we see is where homes are less expensive, the rents are not, the rents are lower as well, right? So if you take Coolidge, the average rent's only $1,500 compared to Chandler and Gilbert, it's $2,200. But the sales price is so much lower that the ratio is better. In Florence and Coolidge, you're getting a much better rent to sales price ratio. You would make if the market was flat, right, and home values weren't going to go up and you were never going to sell the house, you would make your money back faster in Florence and Coolidge than you would in Chandler and Gilbert, based on these current numbers. And then you can see the rest of the numbers. Mesa, Casa Grande is doing quite well as 0.61, and then Maricopa, Tempe, Phoenix, and then the worst place to invest currently in this type of home would be Scottsdale, with an average sales price of $588,000, average rent only $2,500. So the home is significantly more expensive, not receiving significantly more rent. So if you're thinking about investing, maybe you have a ton of equity in your house and you'd like to put that to work for you, start building some wealth. Would love to share some ideas and some opportunities with you. Been helping a lot of investors recently to buy properties in Casa Grande and Coolidge, where they're getting really, really nice cash flow on even brand new houses. So I'd love to have that conversation with you and see if it might be a good fit. And let me know if you have any questions. I hope you found this information helpful, and hope you all have a great day.